Hi everyone, welcome back to Stock Chats. Thank you for tuning in. Remember, this is not investment advice. If you need investment advice, speak to your reputable licensed financial advisor. So today we are going and looking on Jamaica Broilers first quarter once more, and right now we are looking at the balance sheet. Now the balance sheet, you can think of it like a scale where you have your assets, those are the things that are valuable that the company owns, and the liabilities. That's the money that the company has to pay out to other persons, whether businesses, other groups, whatever. That's the money that comes out of the company. So we see there are three columns. The first one is the first quarter, which is August 2020. The next one is May 2nd, 2020. That was the previous quarter. However, you notice that this quarter is audited. The reason why it's audited because some companies, their financial year ends in the fourth quarter, and that's when they are supposed to be audited by the independent auditor. And so the independent auditor does the audited financials. So some companies just don't worry to do their unaudited for the fourth quarter. They just rely on the one that they paid for from the independent auditor. Next, you see the corresponding quarter for the year, and that was ended in 27th of July 2019. So that was the comparing first quarter to August 2020. So now when you're looking at assets, you have non-current and you have current assets. So non-current assets are those long-term assets. These include property, plant and equipment. So Best Dressed Chicken, Jamaica Broilers, they would have their company headquarters, the places where they store their meats, the farm, some of the farms that they have, those are their property, plant and the equipment that they use, like the trucks, the tractors, the conveyor belts, all those type of things. Then you have the right to use assets. So these have like license. Some of these companies with software or patents, anything like that. That's a license. So that's the right to use assets. You look at intangible assets. Those are assets that cannot really be seen. So sometimes it's like a brand. So like Best Dressed Chicken from Jamaica Broilers, that's a brand that is well known. And so these type of assets can have value. Because if you look at, for internationally, Coca-Cola and Ferrari, they make a lot of money just by using their brand. Then you have investment properties. So investment properties, those are properties that are not necessarily used for operation but for investment purposes. Not sure exactly what they do with those properties. Perhaps if we look at the audited financial report, we may see some of those in the notes. Afterwards, there's investments. Big companies, like to have investments, they kind of hedge them against, slow periods. So they may invest in the stocks, bonds, private equity, real estate, many other things. So that's their investment. You have deferred expenditure. So this is the expenditure that not necessarily has to be paid out right now. Deferred income taxes, same thing. And post-employment and benefit assets. So that's like the pensions, so that's 379 million. Then you have current assets. So the current assets of Jamaica Broilers are inventories. The inventories would be, those packaged chickens that we see in the boxes in the supermarket. Those would be like inventories and other things. Best Dress also does high pro feed, and they also do young chicks. And I remember I told you that they have a cold cuts type of business. So these would be the inventories, the finishing product. Now you have biological assets. When you're dealing with companies that are in agriculture that deal with animals, and also some tourism companies like Dolphin Cove, you're going to see this one come up called biological assets. These are live animals. So you're looking at the chicks, you're looking at the eggs, because even though the eggs are not hatched, they're still alive. And you're looking at the adult chickens that are ready to be culled to be a finished product. You're also looking at receivables, that's the money that is coming in from businesses and other persons who owe them. Taxation recoverable, so that's some returns from taxes that they may have paid. So that one is about 23 million. And deferred expenditure, they get back some money from the deferred expenditure at 18 million. And of course, financial assets at fair value through profit and loss, So those are assets that can go up and down based on their fair value. And cash and short-term investment, so that would be cash and probably repurchase in instruments. You have now the current liabilities. So the current liabilities are those liabilities that they'll have to pay in the near future, which afterwards they also have non-current liabilities. So non-current liabilities look at like the payables, which is what they have to pay out to other businesses, other persons. Taxation payable, what the company has to pay out to the government, tax looks like 359 million. Borrowings, loans that they've taken out, so they have to pay in the short term at least 9 billion. And lease liabilities at 231 million. Some of the properties that they are occupying are not there, so they have to pay for leases. When you're looking at the stockholders' equity, when you see the share capital, that's the value of all the money raised from the issuing of shares. So when the shares came on the market, or if they did any other raises like APOs, I'm not sure if they did anything like that. These are the times where you see, the share capital. Reserves, that's money that has been, left over, where they may not have used it to purchase or invest or, give dividends. That's money that's left over. And retained earnings is money that's left over that's not been paid by dividends, out through dividends. And retained earnings is very important for an investor, because this is the type of money, if there's going to be mergers or acquisitions, doing purchasing, investment instruments and stuff like that. If the company is not going out on the market for equity or debt capital, they can take it out of, retained earnings. Also now with COVID-19 pandemic, some companies are using their retained earnings to pay off some of their debt and keep business in operation. So when you look, especially in these times, it's very important to see a hefty retained earnings. And Jamaica Broilers has 17 billion in retained earnings. Shares held by the trust. Now, Jamaica Broilers had a trust that they bought over $3 billion worth of their shares. So you see that 3 billion there. And they put it into that trust. And what that does is that the public, you cannot get that those shares to purchase anymore. So there's less shares on the market. And when this happened, Jamaica Broilers stock price went from $17 to around $30. Because of the pandemic, it kind of settled back down at $25. And then below we have non-current liabilities. So these are liabilities that are not, going to be, they're not expected to pay right now. So you have borrowings at around 8 billion, lease liabilities at 321 million, deferred income taxes at 780 million, and post-employment benefit and obligations at 20 million. So it's always important that the assets are higher than the liabilities, and it's always good that the net current assets is in the positive. If you look on a balance sheet and you see the net current assets in the negative, that can be a red flag that a company is in danger. So this is the balance sheet. This is a little bit longer, but thank you. If you have any questions, or any comments, or any companies that you want me to review for you, you can just drop it in the comments, and please like and share this video. Have a good night.